This is the briefing for Friday, May 19th. Well, as I've been discussing during the week for subscribers, the stock indices appeared to be ready to break out to the upside, and that's certainly what happened in yesterday's trading. We had a little bit of follow through today, but you can see we closed lower below yesterday's close. So it's going to be interesting to see what happens from here. Now, there needs to be follow through, but it is not uncommon for a financial instrument, once it breaks out of an area of pause like this, to break out and then retest the breakout point. So what's going to make this very important in the coming week is this level right here, right around 415. Because if that level is broken through and closed, if we close below 415, that is now support. It was resistance, it's now support. If we close below that, then that's going to suggest that this is a false breakout on a longer term basis, and we're likely to see some type of rotation back through. Now, keep in mind, we had the same thing that happened here. We had a false breakout and then saw this rotation all the way back down. Now, this has been quite a long time in at least this time frame of rotation at the upper extreme of this time frame of rotation. So this breakout, and then we had a shorter time frame which I discussed right through here. So it was a basically 3 time frame breakout that we saw in yesterday's trading. Now this is volume for the spiders, and you can see that it is building. The problem with what's happening from an internal perspective is that breadth is decreasing. Breadth was like half of what it was today to the downside, and it doubled in today's trading. New 52-week highs minus new 52-week lows has turned positive. So that's a positive for the breakout. But my concern is what's happening right here is with market breadth, because you can see there's 2 days of divergence right there in market breadth, meaning that while price is moving higher, the number of shares within the index itself is trading lower. So you can see we had 627 more shares trading lower as opposed to higher in today's trading. So keep in mind that 415, very important level. Would not surprise me to see that tested. And then, of course, if we bounce off of that, the next move could be a very, very nice move to the upside. On the other hand, if we close below it, then that would suggest the probabilities are suggesting this is false, and we're going to see rotation back through this range. Now, the NASDAQ has broken out quite some time ago, actually last week. You can see right through here. And you can see that volume was increasing on the Qs. Volume fell on the Qs today, but this is NASDAQ breadth as well, and it is declining also as we broke out of this 325 area and then tested this 336 area, which was the next upside resistance, going all the way back to this area right through here. So keep in mind that while support now in the Qs is at 336, which is where it closed today, important support is going to be this 325 area. That is more important than what we're seeing right here. Now, the NASDAQ certainly is leading the other indices higher, and that's amazing, mainly because of what we're seeing with what's happening with market breadth. Now, the Russell is lagging all the other indices. You can see the rotational pattern here. If you remember from the previous 2 charts, that the rotational pattern was at the upper extreme, not at the lower extreme. The Russell is at the lower extreme, but testing the upper extreme of this area of rotation. So it's going to be interesting. Russell was down in today's trading. Breadth in the Russell is declining as well. So it's going to be very, very interesting to see how these intermarket divergences and this breadth divergence is reconciled. On Wednesday, we reached a point of being slightly overbought, and of course we've worked that off because of the low breadth readings that we've seen. Same thing with the NASDAQ, so we're basically neutral. This would allow the indices to go either higher or lower on Monday. It really doesn't give us an indication unless we reach an extreme level of being oversold or overbought. Now, in terms of total volume, this is total volume on the NYSE, so you can see it is beginning to build. And as I've discussed previously, when a market breaks out, a financial instrument breaks out, volume is the most important internal component of it because you want volume to come in. You want the trend to begin to develop. If it's an uptrend, you want buyers to come in, but you don't want them to come in all at one time and exhaust themselves. So this is basically what we would like to see on a breakout like this. Now, the alternative is happening in the NASDAQ. And you can see the breakout here. This is total volume on the NASDAQ. And you can see how it is declining and declining even more in today's trading as it tried to go higher. So basically, the volume on the NYSE is suggesting that it is building and potentially going to catch up with the NASDAQ. But the NASDAQ is signaling two divergences, one in volume and one in breadth. So it's going to be very, very important to see what happens in Monday's trading. Looking at where we are in terms of the percentage above 50-day moving average, you can see really not going anywhere, even though we're breaking out. Same thing with the NASDAQ, or this is the percent of issues above the 200-day moving average. And you can see it is basically declining and then paused for the last few days. So in terms of internal components, the breakout in terms of the volume for the select ETFs appears to be increasing. Total volume in the NYSE appears to be increasing, but decreasing on the NASDAQ. Breadth is decreasing on the NASDAQ, on the NYSE, and on the Russell. So it's going to be very interesting to see whether this can hold the first part of next week. If it cannot, and we close below 415 in the spiders, 325 in the Qs, then that's going to suggest that this is a false breakout. And because we've attempted this false breakout, if it can't go any higher, the selling could become accelerated, but it's important that what happens right around this 403, 404 area, should that occur. But right now, I have to go with the trend is up. We've broken out to the upside. Volume appears to be confirming it, at least in the ETFs. Breadth is not confirming it. The Russell is not confirming it. But as long as we hold above that 415 level in the spiders, I think we've got the chance at some higher prices. Have a great weekend, and I'll pick this back up for subscribers on Monday.